Hello there, Mavericks. This is Rob Reinhold. It is July 25th, 2023. Let's get into it. All right, in this session, we are going to talk about today's trading day. We're going to go through the news of the day. We're going to look at the broad markets. We're going to look at the commodities. Then, of course, we're always looking at current market analysis. Do we need to update our scores from over the weekend? We'll take a look at all the market internals. And then we'll go ahead and boil down into some trading setups. And I've got some good ones for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's start off with our broad market analysis. So let's take just the raw numbers today. If we take a look at the raw numbers, we see that the Dow was basically flat. That being said, I believe this is the 12th straight day up for the Dow. Big deal. The Dow is a very small index. S&P up 0.25%. The Qs up even more. Russell was flat. Oil was up. Gold up a little bit. But let's really take a look at the news, what happened today. Ultimately, we didn't have a ton of news. We did get consumer confidence that rose to 117. I think estimates were for around 115. So look, all the economic news keeps coming out as better than expected. I have a lot of perma bears that are saying, but Rob, it's still not good. Remember, better than expected is what the market loves. Because if the market was pessimistic about the economy and it's better than expected, that's good news for the market. They like better than expected. So consumer confidence rose. We did see the 10-year bond have a little bit of a spike today, but it cooled back down. It's holding right around 3.8%. We've got our Fed meeting tomorrow. It is 99% chance that the Fed is going to raise by a quarter basis point tomorrow. I don't think the Fed meeting is going to be that big of a deal. And remember, we are in the middle of earnings season. We got some mixed earnings last night. We had like Cadence Systems that were down a little bit. F5 Networks was up a little bit. Nothing real big last night, but tonight we already have earnings out from Google and from Microsoft. And after the bell, we have futures trading up about 0.3%. Microsoft down a little bit, great earnings, but down a little bit. Google, good earnings, and they're popping up about 6%. As far as the advanced decline line today goes, take a look at it. Not all that impressive. Half the stocks went up, half the stocks went down. And you can see we're still solidly above the 50 MA on 73% of stocks. Let's take a look at the charts. Let's see what has happened this week. As you can see here, we've got this nice high base pattern forming. We got a nice high base. That's it. It's a beautiful high base, and we're pushing up against the top of the range. We could stay in this base for a little bit longer, but remember, these high bases typically break to the upside. If we take a look over here at the Qs, we can see we've got a more of a pullback here. We have a pullback, at least 2 or 3 candles. We've got a reversal candle. Guess what? This is a trigger saying, hey, this is a nice buy signal for the Qs. Looks like there's going to be another run to potentially new highs. Now again, we don't know that, but we do know that when 100 times a stock chart does this, we see more times than not, it actually has a nice bounce at these levels. But let's go back to these market internals, because as we saw, this was another one of those days where the big cap tech stocks pulled everything up. Remember, the Dow was flat, the S&P was only up about 0.3%, but tech was up much larger, and that is thanks to NVIDIA, Microsoft, Google, Apple pulling everything up. Take a look at financials. They actually had a pretty nasty day, and also the healthcare sector didn't do all that great. Other than that, again, 50-50 day, not a lot to be said. So looking at our charts, we see that we are high basing on the S&P. We have completed a pullback on the NASDAQ. We've been at +3 for a long time. There is no change to our monthly outlook. We are still at a +3 for the month. We've got a +1, +2 on the week. We think this is going to be a positive week. There's nothing at this point that is telling us that that's going to change. But remember, we do have the Fed meeting tomorrow. There is no worry about what the Fed does. They're going to raise a quarter of a basis point. The question is, what do they say in their outlook? And I think we're going to hear the same thing we've heard, that they're ready to do more, but they're pretty happy with what they've seen so far as inflation cooling. Let's go ahead and look at some potential trades. Lots of stuff on the buy side. Let's take a look first at Pure Storage, PSTG. Beautiful high base. The only question is, okay, when is this going to break out? Take a look at the support that the 20-period moving average has given this thing. Once, twice, 3 times. At some point, this thing is going to pop. We've got a nice ascending triangle pattern going here. The only question is, when does it pop out? It's looking like it might be this time. We don't know, but look, there's no reason at all not to get bullish on this. I think that you could take a look at like a 35-40 diagonal spread. I think that would be a pretty conservative play if you want to get a little bit more aggressive, long calls, or like a 39-41 bull call spread. But everything looks pretty nice here. We don't know when it's going to break out, but it looks like it is going to break out to the upside. Another nice one here is Fiserv. Now, I love these patterns. I have to admit that in my early years, I could never trade these patterns. I could never trade them because I always thought, I'm buying them at the top. I don't want to be an idiot. I don't want to be the dummy that buys them at the top. Now remember, high bases typically break out to the upside. Take a look at this. This is a rising high base. You are not getting any opportunity to buy this on a dip whatsoever. This thing is very, very strong. There are earnings out there tomorrow morning on this stock. So this stock will not open at 130 most likely. You're going to need to reevaluate this, but this is showing you it's got a lot of strength. If this thing gaps up past 133, 134, I'm going to pass on it. If it gaps down past the 20-day moving average, I'll pass on it. If it opens up in this area, I will look at a trade on this one going out for about 2 to 3 weeks. Looks nice to the upside. Let's check in on a sideways trade. Here we have GM. Now, GM had earnings, bad earnings, and you can see they got punished a bit. But I want you to take a look at the candle here today. They gapped down. They got punished, down 3.5%, but there was an equilibrium of buyers and sellers. At this point, GM is in the penalty box. A lot of times when companies have earnings and they don't make the street happy, they get put in the penalty box. But the bull market is likely to hold this up from falling any further. So I really like this play in the fact that we've got a whole bunch of support down here, moving averages, support lines, but we don't think it's going to break out to any new highs anytime soon because of this report. This is where a butterfly works really well. I'm looking at a 36, 38, 40 butterfly out for 2 weeks on this one on GM. And last, let's check in on a short. I've been hunting this one for a long time. Paramount Global, you can see nice breakdown here. This thing, everything is working against this one. This one does not care that there's a bull market on. People don't like the business. It's going down. Boy, 15 it's right where it's at. You could look at a 15-16 bear call spread, but you're probably only going to bring in about 30 cents on that one. So 30-cent profit potential, but 70 cents of risk. That's a little bit skewed for me, so I'm probably going to have to go down to 14. So I'm going to do the 14-16. I'm probably going to bring in about $1.10, and that means I have 90 cents at risk. And I'm going to make this a little bit more directional on PARA. So let's get into what is likely to happen tomorrow. Everything is bullish. We took a look at the S&P. It was in a high base. We took a look at the Qs. It was in a nice bull pullback. Everything is bullish at this moment. Yes, this bull run will end at some point. I have no idea when, but right here, right now, it's not giving us any signals. So until it gives us signals that it's over, we have to keep on the bullish side. We have to have more bullish trades working, more bullish delta working. Let's let this market just push our accounts higher as it goes higher. When we start to get some technical signals that tell us it's over, breaking below the 20 and 50-day moving averages will be one of the first ones. Then we'll pare back. But right now, everything looks good. We do have a Fed meeting tomorrow, which means expect volatility. I would not be surprised at all if tomorrow at one point we're up 1.5%, 2% and down 2.5% at one point. It wouldn't even surprise me if we had both in one day. in the end, I think this market is in a slow grind higher for the next month until we get to Labor Day. We do have lots of earnings on tap. After the bell tomorrow is Meta. That's going to be a big one, along with like Boeing, Coca-Cola, and Chipotle. So we're in earnings season, so always check. Make sure you know when your positions are announcing earnings and trade around them responsibly. That is the Market Roundup. Thanks for joining me.